We are looking at Ondas Holdings Inc., ticker symbol ONDS, right now trading at exactly $9.04, down roughly 0.14 cents or 1.58% for the session so far. If you are just tuning in or checking your portfolio, that intraday red figure might look like a moment of hesitation, a pause for breath in a stock that has absolutely defied gravity over the last 12 months. But do not let that minor percentage drop fool you into thinking the story here is cooling off. If anything, the tension between what the market expects from a small-cap drone player and the reality of what Ondas is actually building has never been tighter. Most investors look at a chart that has gone from a 57-cent low to flirting with double digits, and they immediately scream bubble or overbought. They see the vertical ascent and assume the laws of physics must kick in, forcing a reversion to the mean. That is the expectation, that a stock up over 1,000% in a year is running on fumes and retail hype, perhaps fueled by traders on Robinhood or SoFi Invest, chasing the next momentum play. But the reality, the deeper, grittier truth found in the filings and the contract awards, suggests that we are not looking at a bubble, but rather a fundamental repricing of a company that has successfully transitioned from a speculative science project into a prime defense contractor. The market is treating this like a tech flyer, but the order book is starting to look like a junior defense prime. That disconnect is where the opportunity and the danger currently lives. To understand why this $9.04 level is so critical, you have to strip away the noise of the daily fluctuations. You have to look at the volume profile. We're seeing millions of shares change hands, not just from day traders flipping for pennies on interactive brokers, but from institutional accumulation that suggests a much longer time horizon. The story the street is telling you is that Ondas is a drone company. That is a convenient label, but it's lazy. If you dig into the recent acquisition of Centriox, or the integration of Iron Drone systems, you realize Ondas is effectively building the operating system for autonomous aerial security. They are not just flying cameras, they are building the automated infrastructure that allows governments to protect borders and critical assets without a human pilot in the loop. The expectation is that this is a hardware play, similar to buying GoPro a decade ago. The reality is that this is a data and infrastructure play, closer in DNA to a young Palantir or a specialized NVIDIA stock application than a consumer gadget maker. When you realize they are selling security as a service and automation as a service, the revenue multiples the market is willing to pay begin to shift drastically. Let's talk about the immediate price action we are seeing today. The stock is hovering just above the $9 mark, a psychological battleground. We saw a gap up recently following the news of the government drone deployment contract, and today's slight pullback to $9.04 is arguably a healthy consolidation. Traders who bought in at $6 or $7 are taking some profit, which is natural. You often see this kind of churning behavior on Fidelity active trader screens when a stock hits a new range. The weak hands leave and the new base is formed. But look at the support. Every time it dips into the high eights, buyers step in. This tells us that the smart money, the funds, and the family offices that do not day trade are defending this level. They are looking at the Q3 earnings beat where Ondas Autonomous Systems revenue surged eightfold to $10 million. You don't get eightfold revenue growth by accident. That is the result of contracts moving from pilot programs to deployment phases. The market expected slow, incremental adoption of drone-in-a-box technology. Reality delivered a massive acceleration, driven largely by geopolitical instability and the sudden, urgent need for counter-UAS, unmanned aerial system, capabilities. I want you to pause for a second and think about the last time you saw a company pivot this hard. Usually, when a small-cap company talks about strategic shifts, it's code for failure. But Ondas has executed a series of acquisitions, specifically RoboTeam and Centriox, that have turned it into a multi-domain autonomy powerhouse. They now have assets on the ground and in the air. The expectation was that Ondas would struggle to integrate these pieces, bleeding cash and diluting shareholders into oblivion. While dilution remains a valid risk we will discuss later, the reality is that these pieces are fitting together faster than anticipated to form a cohesive border protection offering. The recent contract to deploy thousands of drones for a government entity is proof of concept. This is not a press release about a memorandum of understanding that never goes anywhere. This is a deployment contract. That is the difference between a penny stock and a real company. Speaking of ownership, I'm curious about where you stand on this. Comment below how many shares of Ondas you currently hold, or if you are waiting for a dip back to the $8 range before you start a position. It's always fascinating to see how many of you are holding from the sub $1 days versus how many are joining the momentum now. Now, let's widen the lens and look at the broader landscape. If you're managing your own capital, maybe through Schwab Intelligent Portfolios or a self-directed Vanguard account, you know that the defense and aerospace sector has been heating up. But the giants like Lockheed or Raytheon move slowly. They're like ocean liners. Ondas is a speedboat. The reason we are seeing this volatility, the reason the stock can jump 10% one day and drop 2% the next, is because the market is trying to figure out if Ondas is the next AeroVironment or just a flash in the pan. The skeptics will point to the cash burn, and they are right to do so. Developing autonomous systems is expensive. It burns cash. The expectation is that Ondas will need to raise capital again, potentially flooding the market with new shares and hurting the stock price. This is the bear case. Great tech, terrible balance sheet. But the reality is shifting here, too. With the revenue guidance for 2025 raised to over $36 million, the path to profitability is becoming visible. It's not guaranteed, but it is visible. When a company can show a clear line of sight to positive cash flow, the market often forgives the current burn rate. We saw this with Tesla stock for years. As long as the growth story held up, the cash burn was tolerated. Ondas is currently enjoying that same growth pass from investors. Let's dissect the Ondas Autonomous Systems Unit, because this is the engine driving the stock right now. The AAS unit is not just selling drones, they are selling the Optimus system. Think of this like a vending machine for drones. The drone lives in the box, launches automatically, does its job, patrolling a rail yard, inspecting a pipeline, monitoring a border, lands and swaps its battery robotically. No human pilot is standing there with a remote control. This is the holy grail of industrial aviation. The expectation for years was that the FAA and other global regulators would never allow this kind of beyond visual line of sight BVLOS operation at scale. It was seen as too dangerous. Reality, however, has forced the regulators' hands. The need for constant monitoring of critical infrastructure, energy grids, borders, ports, means that human pilots are too expensive and too scarce. Automation is the only answer. Ondas has positioned itself exactly at the intersection of this regulatory opening and technological readiness. When they announced the order from a major European security agency to protect one of Europe's largest airports, that was a signal. It meant that the technology is trusted enough to operate in one of the most strictly controlled airspaces on the planet. We also need to talk about the retail trading phenomenon. If you look at the chatter on Robinhood forums or StockTwits, the sentiment around ONDS has shifted from pump-and-dump skepticism to genuine long-term belief. This is crucial because retail investors often provide the liquidity floor for these high-growth stocks. When a stock like this pulls back, as it is doing today down to $9.04, the retail army often steps in to buy the dip, preventing a total collapse. This creates a higher beta, sure, but it also creates a sticky shareholder base that is less likely to panic sell than an algorithm. But you should never invest solely based on what you read on a message board. You need to do your own due diligence, perhaps using the research tools available on Fidelity or Interactive Brokers to look at the institutional flows. And speaking of institutions, we are seeing names like Hood River Capital Management and Vanguard increasing their stakes. When you see funds adding millions of shares, it's not because they like the logo. It's because their analysts have crunched the numbers on the backlog and see a discrepancy between the current market cap and the future cash flows. Let's get technical for a moment. The chart shows a classic stair-step pattern. We had the explosion from the lows, a consolidation period where the stock drifted, and now a new leg up. The resistance at $12 is formidable. That is the next big test. If ONDS can break through $12, the technical analysts will tell you there is blue sky above, meaning very little historical resistance to stop it from running higher. But if it fails to hold the $8 support, we could see a slide back down to test the 50-day moving average. Today's price of $9.04 is squarely in this consolidation zone. It's a waiting game. The volume today is a bit lighter than the explosive days last week, which suggests the sellers are not aggressive. They are just trimming. If there were a rush for the exits, we would see high volume on the downside. We're not seeing that. We're seeing a slow drift, which often precedes a bounce. The integration of Centriox is another point that cannot be overstated. Centriox does counter UAS. In a world where drones are being used for asymmetric warfare and smuggling, the ability to detect and disable unauthorized drones is just as valuable as the ability to fly your own. By owning both the Sword, autonomous drones, and the Shield, counter-drone tech, Ondas has created a closed-loop ecosystem. A customer can come to them and say, I need to patrol my perimeter with drones, and I need to make sure no one else flies over my facility. Ondas can say, we can do both. That is a powerful sales pitch. The expectation was that Ondas would stay in its lane as a commercial inspection company. The reality is that they have aggressively expanded